Okay, everyone, welcome back to the channel. Matt with Greenbar Trading here. Currently 26 minutes until the opening bell. Gonna let some people filter on in before we get into it. So we're gonna look at the economic calendar first, and then we're gonna get to the charts. So we'll let some more people filter on in, and then we'll start in just a moment. Okay, so let's get into it. We're going to start with the economic calendar. By the way, very cold out up here in the Northeast. I guess it's not that bad, but I was just out bringing my kids to the bus stop. Definitely needed some extra protection. But it is the winter, so, and it is January 10th, as the winter is just flying by, which I'm not going to complain about at all. Definitely more of a summer person, even though I play ice hockey. Definitely more of a summer person. So, anyway, how many of you guys caught that game yesterday? That was just terrible. The college football game, national championship, to be that one-sided is awful. Just absolutely terrible. Very, very boring game. I guess unless you're a Georgia fan, but that was just pathetic. All right, economic calendar. Let's do this. So we had Powell speaking just about 5-10 minutes ago. As far as the economy goes, and our markets, I don't think he said much about them. Now, I don't know if the Q&A has happened yet, so there's always a chance that somebody might ask a question about the economy, rate hikes. So far, I haven't seen anything like that. But yesterday, we did see a lot of that from the Fed, and that was at 12:30. We had Bostic speaking and Daly. So Daly, and basically both of them, and every one of them so far that has been speaking, has been saying the same thing. They see interest rates rising above 5%. They're going to keep them there. They're going to overshoot if that's what it takes. So what happens is if they start to see really good numbers, whether it's the labor market, whether it is CPI and inflation numbers, they're simply telling you that they're not going to pivot anytime soon. There's Fed presidents that have said they're not going to lower rates through 2024. 2023 just started. So they've been telling us this. So, seeing the markets just rallying on Friday after that jobs number, where we saw more jobs created than expected, we saw lower unemployment, and we got a rally in the market that just is disappearing. So, we have to realize that you have to prepare for further time frames out. Just being in that, intraday market, have your levels down and really watch what you're doing, because in this market, you can get stopped out pretty quickly before the move goes in your favor. So you can have the right plan, but the stop is too tight. So loosen up the stop a little bit and get that move that you're looking for. Try to get good entries. That's key. Because if you get a great entry, then you can have that looser stop. So anyway, that's what the Fed is saying. As far as the economic calendar goes today, like I said, you had Powell speaking and wholesale inventories at 10 a.m. Don't care. Wednesday, nothing scheduled. Thursday, that's the big day, CPI and initial jobless claims. All right. That's the big day right there on Thursday. Earnings season comes in full blast on Friday. And I'll just show you guys here. On Friday, you have all the banks. All the big banks are going to be reporting. So we're going to have to, keep an eye on that. Listen to what they have to say. Listen to what they see in the economy. You're going to get a good idea of where they see the consumer because they have all that data. They have the banking information, people's available balances, how many are using credit cards. They have all of that. So it's going to be very interesting to see what they see for 2023 coming up. So that's going to be something I'm definitely interested in. Netflix 30-minute chart broke uptrend. I'll take a look at that when we look at the charts. So actually, let's just get into that now. And something I want to go over first, this is the SPY, right? If you were in the live stream yesterday, this is exactly what we had on the screen, except for this candle, right? Because we came on before the market opened. I had said if we get a push up out of this bear flag, you're coming into the point of control, which is this huge amount of volume, this huge resistance. You can tell by this red box. This is something that I did not put on my chart today. This is from yesterday. And I said, if we go into that, you're going to see a rejection. That is exactly what we saw. Look at that daily candle right there. That is a gross candle for the bulls. A great candle if you're bearish, because look where you opened up. We opened up right here, right at that top trend line. Broke out, came right into that huge amount of volume, and then sold off. And now we're right back into that same bear flag that we have here. So that's bad price action. That's what's called very, very bad price action. A weak market right there. That's a rejection at that volume. And this is something that we showed yesterday during the pre-market. I said, I can't get bullish. I cannot get bullish this market until we break through the point of control. And that's going to be the 200 moving average, the downtrend line that's been there for a year. I can't get bullish until that happens. Until that happens, I am bearish. Neutral to bearish, because anything can happen in, a couple of days from now. But all in all, I can't see how we don't retest down here these lows. And especially on the Qs, you guys can see there's just a huge drop off here of volume. And this is the year. If you look at the 3-year, it gets even worse. The 3-year chart right here. This is the volume for the last 3 years. So since COVID happened, and this is the QQQ, this is the NASDAQ market. Since COVID happened, all the volume, if you have bought in 2021, this is where all the volume happened. If we break this key level here at 260, and like I said, I have alerts set. We have a big vacuum here, all right, for price to come back down into. There's no support here. So be careful with the tech stocks. Now you can always see, some near term, some strength in the near term, but, all in all, with the Fed still going to be hawkish, that's not good for tech stocks. It's the bottom line. I mean, it's just not good. So that's what we see here on the daily chart for tech. And I'm just going to take this volume profile off. I mean, take a look at that daily candle right here. That is an ugly, ugly, ugly candle. Very bad daily candle right there. All right, so we'll see what happens today. The futures were down a lot more, and I'll just go over here to the futures market. We were down all the way to 38.91 and have since rallied back up to where we have that consolidation here in the pre-market. So I traded this a couple of times. I took 3 trades, 2 contracts each, and I was just taking the bottom of support here and going long and then selling and going long again at the bottom and then selling, and same thing. All right, just trading in that very small consolidation here, just scalping my way to $50. And this is where we got today, and I want to see the SPY actually on the 1 minute. All right, on the SPY you have 389.73 is that 50-day moving average that could not hold up yesterday. So if we do continue to move up, you got to look at that area around 390 as resistance. If we break down, I have 380, 385, and then 380 as the next levels of support. So I want to take a look here at Netflix. I always screw up that ticker symbol. All right, on the 30-minute. Hey Matt, how you doing, buddy? Yeah, I would say so. All right, looking at Netflix, the 30-minute chart broke uptrend. Just reading a comment right now. I mean, what I see here is a stock that has rallied up a ton right into resistance. All right, so this is that uptrend. You guys can see that pretty clearly. So what happens is when something is running into resistance and then breaks its trend line. Now, this broke the trend line here in pre-market. I'm just going to get rid of these. So that broke the trend line in pre-market. This is Netflix. So what I would look for is taking a short right back around this 313, 314 level. If this bounces into it, that could be a good area here. So if you want to be really, really careful, right around here. So you can see there was resistance here, then it becomes support. Now this could become resistance. With this trend line, this is what we call the potential right there for a multiple confluence trade, okay? If for some reason we get up here, you take puts, because this looks like the trend line breaks on the 30-minute chart, you take puts here. If for some reason it doesn't go your way, because not every trade is going to work out, you have to have a stop loss, and just know that before you get in. Know where you want to set your stop before you get in, and that would be around that trend line. If it breaks the trend line, give yourself a little room, try to get a good entry, but you're at 311 now. So to get this trade, you got to be patient. This actually will have to go back up and get close to where it closed yesterday, right? Around 313, 314, that 315 area, that could be an area there for the potential to get short. Thank you for bringing that up. This does look like a decent play here, but it is still support at the moment right around this area, 308. And then if you did get in here and you were looking for a quick scalp, I would always target that pre-market low, right? And that's a big gain right there if you can take that. So we got 12 minutes to the bell. Is there anything anybody else wants me to look at? That was a good call out. It's always nice to get short when a trend line breaks, but it's being broken in pre-market. So these trend line breaks are much better if they happen during the actual cash session. So we'll see. Have a good day, Matt. Look how SPY just broke out of this right into this resistance and then came right back down. So if you were in puts right here, you get stopped out right before the move. The best thing to do would have been just to wait until it got into this area. Now, obviously, not every, you're not going to know the actual perfect spot to get in. It's very, very tough to do. So if you did take a trade here and got into puts and then it, broke out, that's just the way trading works. Try to take longer expirations on your trade instead of trying, same day expiration and seeing it just go right against you. It's tough to manage risk when you're trading same day expirations on the options. I don't recommend that anybody trade like that. That's just really, really way, way too risky. We want to be in this for the long haul, not that short term. You make profit for a week or a month, and then you're gone in a couple of months because you blew up your account by trading these crazy strategies that you see online or you hear about or you see on Twitter, Instagram, somebody making $30,000 in a day. That takes a very long time. And you need a very, very large account to do that. Obviously, there's going to be stories about, hitting lotto plays, but that's just gambling. So you might as well just open your DraftKings app. Maybe there's a soccer game on right now in Europe that you could just gamble on, because that's basically what that is. So, all right, guys, I'm going to probably stop it now. We got 8 minutes to the bell. Everybody trade safe. We're still in this consolidation. So if you're going to be trading in this, it's just choppy. It is what it is. It's very choppy. There is spots where you can make money, but it's, this move hasn't happened yet, right? We want to see a nice trend. Give me a trend to trade, not this sideways action for the past month. All right. So that's it, guys. Have a great day. And I will see you guys on the next one. Take care.